Thank you, Peter. It's great to be back in your platform. Today, we're going to talk about NCA or Natural Capital Accounting, which is perhaps the new final frontier in front of the accounting community. NCA, as we all know, revises the definition of GDP, the national income. We also know that numerous economic activities pollute the environment, degrade water resources, damage soil and oceans, deplete forests and fisheries, and cause global warming. When these negative outcomes are considered, an appropriately calculated GDP might show a net destruction of wealth in the society and not creation. NCA, Natural Capital Accounting, offers a solution to consider the value of changes in a nation's resource to more comprehensively measure the national income. Now, this is not a new idea. Economist J.R. Hicks in 1939 defined income as the surplus an entity produces in a year while leaving it equally well off. Extending the same logic, a nation's GDP must not only measure its economic output, but should also consider whether economic resources were left equally well off, or they were depleted, or they were created. Now, NCA is important, perhaps one of the most important things in front of the society today. Many agencies have started working on designing a new accounting system to incorporate NCA. It's a laudable idea. However, I'm highly skeptical about its operationalization. Let me be very clear. I admire NCA. I have high appreciation for it. My concern is how it will be operationalized using accounting. I'm going to argue that NCA is a highly complex accounting problem, and a hierarchy of escalating and increasingly complex accounting challenges must be addressed before implementing NCA. I'll also argue that accountants have failed to solve simple first-order problems, which makes me highly apprehensive whether they can address the challenges of NCA. So let me first talk about a simple first-order problem, which is the measurement of intangibles at the company level. As we all know, modern balance sheets have become largely useless in depicting the underlying resources of modern corporations. Take the case of Apple, Microsoft, and NVIDIA, three of the most valuable corporations today. Their key assets, as we all know, are their brand name, their world-class R&D, and customer relationships. None is found on the balance sheet. So when Apple spends on creating new technology or enhancing its brand, its balance sheet ignores the fact that the company is creating value, that it is enhancing its key resources. On the flip side, consider Nokia and BlackBerry. When their technology lost relevance, the balance sheet failed to depict the depletion or the destruction of key resources of the organization. So neither the creation nor the depletion of key resources are recorded on modern financial statements. How can this logic be extended to NCA to address the basic premise, which is to calculate comprehensive income, which takes into account creation and depletion of key resources? Now, recording intangibles at the firm level was a first-order problem that accountants failed to solve. It concerns just one asset, which is intangible asset, just one set of stakeholders, which is external investors, and just one economic entity. So now let's move on to a more complex problem, which is ESG performance still at the firm level. Recall that accountants promised to create an integrated reporting system that will presumably take multiple dimensions of ESG and will serve the needs of a variety of stakeholders. Including on this platform, I've heard those promises. That system was promised to assist us to assess a firm's performance on numerous dimensions of environmental, social, and governance issues and corporate social responsibility matters. The promise was that the system will create a single score incorporating multiple dimensions of ESG and CSR. Now, by definition, this problem involves multiple stakeholders, with different utility functions and with different preferences. Those that care about shareholder wealth, lender security, racial diversity, gender equality, biodiversity, governance, wealth, equality, air, water, and soil pollution, workers' welfare, local economy, tax compliance, just to name a few. By definition, the aims and objectives of different stakeholders are likely to differ, even contradict each other. Companies often play zero-sum games in trying to subtly manage the expectations of different stakeholders. So, a single score is theoretically impossible. But the accountants had promised that. Let me point to two pieces of evidence which show accountants' failure on creating an ESG or CSR score at the firm level. First, ESG scores created by numerous organizations bear little correlation among themselves, which means none can be relied on. Second, the whole notion of ESG has boiled down to a single metric, which is accounting for carbon emissions, the tonnage of CO2 produced. This is consistent with accountants' core competency, that is, counting an element that is easy to count. The more complex issues or the complex dimensions, such as contribution to society and governance or its constituent elements thereof, are largely forgotten. So one more example of accountants' failure of a higher order problem. Now let's come to the most complex problems, which is the topic of today's discussion, which is natural capital accounting. Now, NCA, the natural capital, represents the combined stock of the resources of a nation. It's not just about resources of a company or an institution, but about all resources of all entities in a nation. They could be formal or informal, organized or unorganized, private, public, governmental, sole proprietorship, community-owned, land-grant institutions, and the list is endless. Resources could be tangible, intangible, known or unknown. We are talking about valuing all the resources in one common monetary unit. Now I've described the context. Let me express three concerns, possible concerns with NCA. First, how to create a summary metric when different vectors point in different directions. How does one value land, water, or air resources in a common monetary unit? As they say, beauty lies in the eyes of beholder. So valuation from whose perspective? Where are the valuation models governing these resources? What is the theoretical basis for those valuation models, if any? How about if constituent elements point to different directions? Vectors are in different directions, some orthogonal, some parallel, some vaguely correlated, and some opposing each other. How can a summary metric be created? Second, who is the judge on how these measures will be used? Society must take decisions based on NCA, summary metric, and its constituent elements. Society must take decisions that involve gives and takes, compromises, and trade-offs across different stakeholders in society and across time. For example, moving a whole village to conserve water and forest resources, or sacrificing land and mines to enhance the water systems of the nation. The question is, how will accountants assign values to different resources when they belong to different parties, whose interests contradict? What about decisions that involve sacrifices today in order to create future benefits? What if resources are owned by the most powerful private interests in the society, or the largest taxpayer, or the largest employer in the society? And who will resolve these differences? Who will determine the sensitivities of penalties and rewards for different elements of NCA? Will it be politicians? Will it be judges who are appointed by the most powerful segments of the society? I shudder to think about the outcomes. Third and most important, which is the topic of today's discussion, will a different accountant show up to measure NCA? Accountants are called bean counters for a reason. They prefer to count something that is easy to count, and they shy away from measuring meaty constructs which are important to the society. examples I just described in my talk today. In summary, NCA is a bigger challenge than ESG. Remember, NCA is at a national level. We're talking multiple entities here. NCA is a bigger challenge than ESG at just firm level, which is a bigger challenge than measuring intangibles at the firm level. The same set of accountants who fail to address the first order problem now claim that they will solve a bigger, more complex problem. I am highly skeptical. To conclude, I will say that new courage and new initiatives are required on the part of my accounting community. So I hope that a different accountant shows up this time to measure NCA. Thank you.